This is Eric Muathe, Muathe.com, January 28th of 2021. Let's take a look at market here. It's going to be a quick video. So right now we're seeing the market coming a little bit off the highs of the session. Keep in mind, yesterday the market was down a similar amount, down about close to 2% in what was a big down day. Now, a quick side note, one of the reasons why the market is bouncing, we can say, is because of the RSI 50 and because of the 50-day moving average. But to explain the big down day yesterday, we can say it's because S&P 500 dropped below 50 yesterday. And today is recapturing the RSI 50 level. Hence, the last 2 days have been dramatic. I've been saying for a while, don't expect a major market drop until we break this RSI lows line on the daily. This would have to break first and foremost before we can see a strong push below the 50-day moving average and below that. So I would say anybody looking for an aggressive sell signal in the market, this is the line to watch, in my opinion. Now to the reason for this video. We can see here at the highs of the session, when I saved this chart about 20 minutes or so ago. If you take a look at this line here, which represents the 5-minute chart for the S&P 500, RSI setting of 26. If we draw a line right here representing a uniformity, so this line right here, in fact, let me change colors and give it a blue color. So this color right here, let's do that again. All right, so this right here represents this break of the RSI here, actually there, turned into resistance for the highs there, resistance here for those highs, resistance here for the highs there, and then the all-time intraday highs for now went above the line, back below it. As I always say, whenever you see uniform activity rejection, that tends to be meaningful, and this so far remains to be the all-time high for the S&P 500. And you can say we came close here for the highs there before yesterday's drop, and now this is potentially where the market was coming to stall. Now this was 20 minutes ago. If I update this chart, we see that the market is very aware of this line. So draw the blue line again. We can see the market is already responding to that area. So let me say this. Now, yesterday the market was down big. Today the market is up big. It's something I think the market is telling us. In my opinion, I get the sense from this stock and other stocks that have been moving lately that the message of the market is that do not attempt to short stocks. Right? That's the message. Do not attempt to short stocks because we are going to take you out. That's the market's message. Do not short stocks. But I think that's the exact reason for these moves. So these instruments have been moving without any type of rationale. A lot of these stocks, for obvious reasons, short squeezes. And again, let me repeat that. The market is trying to tell us do not short, do not short, do not short. Do you know why I think that is the case? Because exactly that's what might be the game in the coming weeks and in the coming months. That they want you not to take advantage of the potential market collapse in the coming weeks, days, months. That's what I think the message is. In other words, traders are being programmed not to short. Just when shorting becomes the thing to do. It's just something for you guys to consider. I'm not saying do anything, just my own thoughts. In fact, if I was to be honest and candid, I believe this high on the S&P 500 might stick for a while. Either way, a fresh breakout would change the landscape in my opinion, but for now, try and understand what the message is. The message is clear. It's in your face. Do not short. Which makes me suspect that's exactly where the money is going to be made in the days, weeks, months ahead, if not years ahead. Just as GameStop has popped and is being used to tell traders not to short the market, I think just as this one has popped, there's a good likelihood the general market is next. Again, just my thoughts. Food for thought. Should never have been trading here. And like I said in the previous video, this is home for this instrument. But understand, we had to find a reason to make traders scared of shorting the market. All right, enough of that. Let's go back to charts, and we can see here the main reason for this video is right here. Uniformity line can be used to identify changes in a market like we saw here. And now we are seeing here, let's say if we are playing this market from purely the chart standpoint and not from my rambling and insightful insights. Haha. This is suggestive from a swing trade perspective. In the short term, markets are looking to point down. Not necessarily fully today, because the S&P 500 is moving above RSI 50. And the true sell-off can only begin if and when we clear the RSI lows line, the RSI lows line connecting recent RSI lows. Would have to break first and foremost before the market can be primed to the downside. Only that break will have less and less people taking advantage of it because they're scared to short, which exactly is what was meant to happen. Eric Muathe, Muathe.com. No apologies. And so it is. Love light, like love. Namaste.